Ravi Chadda, MD and CEO of Prodigy Investment, joins us right now on the show. Good to have you, Ravi. Thanks so much for joining in. What do you make of the mood per se? It's not just about good news getting rewarded. Some of the bad news are getting shrugged off as well very easily by the markets over the last few sessions. What do you make of the mood in the markets? And you think this can last for a little while longer? Are you in the buy camp as well, or are you staying away right now?
I think you make a very interesting point, and that's something that has been happening in the market where, the bad news is being shrugged off and the good news is being rewarded more than amply. My sense is that this rally is extremely strong. It's not willing to surrender. We saw the previous high of the market, which it had made in October, around 53.50, and the market paused for a break there, and we had what you might call a running correction. There was no real price correction, just a time-wise correction before the market has resumed its move above the 53.50 level. So my sense is that there's a lot of flow of money still coming in. Market is not willing to yield, and I would feel that this rally has legs to get to about 5,700 on this move. In fact, I would say this is a mini blow-off that has happened. And I think having said all this, I would say that I expect it to go up, but I would at the same time be cautious about entering at this point.
What's your... make your point, please.
If you are invested, stay invested. The market has higher to go. If you are not invested, you need to be careful.
What about sectoral rotation and the broad themes that we are seeing in the market play up in anticipation of what may come by in the budget, whether it's interest rate sensitives or even for that matter, fertilizer, sugar stocks that are active? Would you take a short-term call on these sectors?
I think at this point in time, it's very much the interest rate sensitives and what you would call the risk on trade. All of last year we saw it was a risk off trade where you had the defensives going up. But at the moment, it's very much risk on. I think fertilizer, sugar, etc. I think they are very minor themes at this point. The big call is that interest rates are going to come off, and all the more so because we saw, core inflation numbers also beginning to weaken. Food inflation has been weak. Core inflation numbers are looking weaker already, which is good. The latest GDP estimates are below 7%. So there's a lot out there for RBI to take cognizance of. And I hope if the fiscal deficit number as well as the government borrowing numbers in the budget are under control, there will be good reason for RBI to go ahead with rate cuts. So it's very much interest rate sensitive, auto, banks, which you should really focus on just now rather than the minor budget themes.
Finally, one step taken at least for the power companies, because they have been doldrums for the last 12 to 18 months. The PMO asking Coal India to sign in coal supply agreements with all the private producers. First step taken amongst many, hopefully. You think finally this could be a sign of revival for some of the power companies?
Yes, I think it's a very positive sign. All through the last year, the power sector has underperformed tremendously because of the supply lines on coal. So this is one good step, but I think much more needs to be done for them, because I think there's a severe situation for power. How the economy is going to grow at 7%, 8% without the power sector coming through is a big question.
So would this say maybe a linkage being given and maybe some more steps being taken with the PMO assuring that they will do that? You think it might be a good time to probably even, do these power companies, the private power producers, merit an investment case as well right now?
I think that at this point it would be a tactical play. I would wait for much more to come through before it becomes a structural play. It's just that they've been so beaten down, and that the nature of the market has changed, so beaten down stocks are doing well. So yes, there is an upside in the near term, but if you have to have a follow-through rally, you would need to see much more.
Is that what's happening, Ravi, or is that what's playing out in the capital goods space as well? I mean, not that the numbers in the Jan quarter have been exemplary. I mean, say maybe a couple of smaller companies, the large ones really haven't given a blowout quarter. Is it the market mood that is really leading to the kind of moves that we're seeing in the large or the smaller cap good companies?
Yes, I think there's an expectation that one is that they will benefit definitely from the turn in the interest rate cycle. I think the other thing is that consumption remains so strong that somewhere down the line the investment cycle will have to follow if consumption is going to force people to make investments. So while we may be a quarter or two out from that, at the same time it's very likely that we've seen the worst, and that's what the market is pricing in.
Ravi, specifically in terms of sectoral trends, where do you see leadership coming into the market? While we have seen, commodities lead the way in this rally, but there has been a fair amount of participation coming in from other sectors as well.
I think two sectors stand out for me. One is auto, and you're seeing that in telco. I think you're also seeing M&M today, which is very strong. And M&M results were also not very good, but yet it's now much higher than it was on the day of the results. So that's clearly telling you that there's great interest in the auto sector. I think the second sector that I would pick is financials. Clearly, the private sector banks, they look to me the strongest. And many of the NBFCs, whether they're in consumer finance like Bajaj Finance, or they're in the housing finance space like India Bulls, or you have even Diwan Housing doing well. HDFC has not moved so far. I expect that will also join into the rally. So I think these are the spaces that I would focus on, and I would like to give a disclaimer that we own many of these stocks.
Which is fair, Ravi. But since you made that point, the other interesting bit about financials, Ravi, is what's happening to some of the mid-sized PSU banks. Because, well, there are a handful of them have moved up because of maybe a placement to LIC or so on and so forth. But earnings were completely split right down the middle. You like large private banks. What about mid-sized PSU banks? Any names there, or do you like that as a space as a whole?
Actually, because of the asset quality concerns and the possibility of getting a negative surprise anytime from many of these banks, I would prefer to stay with banks like, even an ICICI Bank, or you have some of the good private sector banks like, say, an ING Vysya, or you have a Jammu and Kashmir Bank, which trade very close to their FY13 book values. So in no way are they really much more expensive than some of the PSU banks. I would prefer to focus there at this point, and only once they become expensive would I be forced to go down the ladder.
What about the commodity space, and what's your overall view there?
Yes, I think many of the commodities have been doing reasonably well, but I'm not so convinced about commodities overall, because there's so much of a play on the rupee over there. There's so much of a play as to what happens to China. So I prefer playing many of the domestic plays and sticking with that. There's so much opportunity that the one commodity that does stand out for me is cement, which is a purely domestic commodity. That's been doing well, right through the bear market actually. It surprised everybody. All the analyst reports are negative on cement, but yet it has so much of representation in the list of new highs. It continues to do well. So I would probably continue to focus there.